All right, let's break this down. 119,000 jobs were added to the economy, but somehow unemployment still rose to 4.4%. At the same time, job layoffs have hit a 20-year high in October. And to top it off, we're missing an entire month of job data. I'm telling you right now, most people aren't ready for what's coming next. Stick with me through this video, and I'll explain exactly what's happening and how you can prepare for what's on the horizon. Now, the September jobs report was supposed to be released on October 3rd, but because of the 43-day government shutdown, it was delayed and finally came out just a few days ago. On the surface, the numbers seemed all right. 119,000 new non-farm jobs were added in September, and unemployment at 4.4% didn't seem terrible, even though it's the highest it's been in almost 4 years. But hold on. The August jobs report was actually revised to show a job loss. That's big. And here's where it gets even more concerning. We don't have the October jobs report. It was canceled due to the government shutdown and won't be available until it's merged with the November report. So we're looking at outdated and incomplete data during one of the most delicate times in our economy. Now, here's what's really going on behind the scenes. All this data is being delayed. Companies aren't sitting around waiting for the next report. They're making moves right now, trying to prepare for what's ahead. And trust me, they're not acting lightly. Major companies are already laying off tens of thousands of people. This is something the news reports. They don't always make it front-page news. In the past 2 months, we've seen some big layoffs. For example, UPS announced 48,000 job cuts. Amazon has slashed 14,000 corporate positions, and Verizon just had a major round of layoffs. On top of that, big tech companies like Meta, Google, and IBM are cutting jobs because of the push for AI. And it's not just tech. Manufacturing, telecom, retail, and even real estate companies are laying off workers too. Real people are losing their jobs, and real families are being affected. Now, October was a big wake-up call. It saw over 153,000 job cuts, making it the highest total for any October in more than 2 decades. 39,000 workers across 21 states were notified of layoffs, some of the highest numbers since 2006. And this wasn't limited to one sector. It's tech, transportation, telecom, retail, finance, real estate, and beyond. There's widespread job loss happening, but here's the kicker. We don't have an official report for October. So the month with the biggest layoffs in 20 years is the same month that we don't have data for. Think about that for a second. So why is all of this happening? Let's break it down. First, we've got the obvious culprit, AI. It's replacing jobs across the board, white-collar and blue-collar alike. Companies like Amazon and telecom giants are replacing everything from customer service to logistics and admin roles with machines and AI. Then you have companies cutting costs. Margins are tightening, borrowing is more expensive with higher interest rates, and businesses are bracing for a slowdown. And what's usually the biggest expense for companies? Payroll. If a company can replace a $50,000 a year job with AI for a fraction of the cost, they're going to do it. Let's not forget the government shutdown. Federal agencies froze hiring and delayed projects, and we have millions of Americans who work for the federal government facing instability. All of this is making consumers tighten their belts, which affects company profits. And when profits take a hit, companies lay people off. This is where President Trump comes in. He's publicly pushing the Federal Reserve to lower interest rates quickly. He believes that lowering interest rates will help businesses and the economy, especially as he expects to appoint a new Fed chair soon. But here's the problem. Political pressure on the Fed causes uncertainty. The Fed may hesitate to act because they don't want to be seen as politically motivated. It creates a split in the Fed, which makes it harder to make decisions. That uncertainty trickles down to businesses and markets. So why does all this matter for you? Well, it affects job security, investments, and even rental income. If tenants lose their jobs, your cash flow takes a hit. If the Fed doesn't lower rates, borrowing stays expensive. The stock market, which doesn't like uncertainty, may drop. And if you're relying on your side hustle or other income streams, you might see a drop in demand as people cut back on spending. Now, the next big decision is coming up. The Fed's next meeting is in December. The stock market is hoping for a cutback, but that's not guaranteed. The Fed is divided on what to do, and if they don't cut rates, businesses may prepare for slower times, leading to even more job cuts. We could see unemployment rise further if the Fed doesn't act. So, what should you do to prepare? Here are a few things to think about. Stress test your income. What happens if one of your income streams drops by 20 to 30%? If you own rental property, how would you survive if a tenant stops paying rent for several months? Think about these scenarios now. Reposition your investments. Shift towards cash flow assets or defensive sectors like utilities, healthcare, or consumer staples. These are essential industries that provide stability in times of economic downturns. Hard assets. Consider investing in real estate, precious metals, or collectibles, assets that aren't tied to the volatility of the stock market. Prepare for slower rent growth. If you own rental real estate, expect slower rent increases and more tenant turnover. Cash reserves. Build up more liquidity to weather the storm. Cut unnecessary expenses and avoid taking on bad debt. Lastly, stop assuming that interest rates are going to drop soon. Don't base your financial future on the hope that the Fed will cut rates quickly. You need to plan for many different scenarios. In summary, things are not as great as the headlines suggest. The 119,000 jobs added may sound good, but the record layoffs and missing job data tell a different story. AI is quietly replacing jobs, the Fed is divided, and the economy is heading into uncertain waters. So prepare now. Don't wait for the crisis to hit. Make the necessary adjustments to safeguard your financial future. You've got an advantage by staying informed. Now take action. If you found this valuable, drop a comment and let me know if you see the job crisis coming the way I do. And make sure to stay plugged in for more updates. Remember, the best person who's going to look out for you is the one who's prepared. Keep your eyes open and stay ready.